برعاية فينيكس جروب UAE.
Hello crypto investors and welcome to your go destination for all things cryptocurrency. This is Crypto Weekly, where we cut through the noise and bring you the latest news, in-depth analysis and exclusive interviews that shape the ever-evolving crypto landscape. I'm Mayban Khadra and here with me is Henry Arislanian. Hello Henry again.
I say this every week. We say another exciting week in crypto, but they're generally all exciting. So here we go.
Many headlines to cover. We're starting with the first one with Binance, the world's largest cryptocurrency exchange, and MGX, the Abu Dhabi-based investor in AI and advanced technologies. They have announced a historic $2 billion investment. This partnership seeks to revolutionize the cryptocurrency industry and foster innovation in the region. Now, this is a very major news. First of all, because this is the first institutional investor in Binance, and this is, Henry, the biggest deal in the crypto industry ever.
Absolutely. It's been interesting because this news actually gathered a lot of attention in the global media as well with this investment from Abu Dhabi. A couple of things. First of all, I think especially for our international audience, MGX is chaired by the deputy ruler of Abu Dhabi, so obviously it's a big strategic move from that perspective. Second, as you mentioned, May, this is the single largest investment in a crypto firm. Interestingly, also, it's the single largest investment in crypto. In this case, stable coins were used, and of course, it's the first institutional ticket in Binance. I think what's even more important for a part of all these things, this is really positions even more the UAE as a leading player when it comes to digital assets. We've had over the last couple of years a lot of regulatory clarity, pretty much all the big global players setting up a presence here, and now having literally the members of the royal family invest in one of the largest crypto exchange globally sends a very strong signal that crypto is welcome in the UAE.
And in a recent survey conducted by Grayscale Investments and the Harris Poll, it revealed that a significant portion of Americans with investable assets exceeding $1 million, they own cryptocurrency. This figure surpasses the average of 21% among the general population, indicating a growing interest and adoption of cryptocurrency in the financial landscape. Now, this is very important, and what is driving this growth and this adoption from high net worth investors is geopolitical tensions, the outlook for the U.S. economy, and I think as well, Henry, the fact that Trump is now leading the United States means something for these investors.
You know, the Trump factor in crypto and Bitcoin has been there for a while. I think it's going to continue. You know what's interesting in this data, when you look at it, yes, one high net worth individual American investor out of 4 owns Bitcoin. What I find even more interesting is that 40% of those surveyed believe that their portfolio will hold Bitcoin in the future, which I think is very interesting. The data that I find very particularly, that gives a very interesting color is that when you look at the age group, for those, for example, under the age of 50, 53% expect to have crypto in their portfolio, but the number falls to 22% for those that are over the age of 50. Perhaps not surprisingly, but again, very interesting on that side, that age plays a big role in this perspective. And one thing it's important to understand also with U.S. investors, many look at Bitcoin as a pure investment. It's a speculative asset for many of them, whereas when you look at other parts of the world, people literally use it as store of value, as a mean of exchange, as something they use on a day-to-day basis. So very interesting piece of data. I expect many more pieces like these over the next couple of months.
And in a recent survey conducted by Data for Progress, it revealed that a significant portion of potential U.S. voters, comprising 600 individuals, oppose the establishment of a strategic reserve dedicated to cryptocurrencies like Bitcoin and Ethereum. And the idea for them is really simple. They don't want their taxes to actually go and fund a cryptocurrency reserve, which Trump and I think also Scott Bessent promised that it won't be the case.
Absolutely. You know, it's interesting because when you look at this research, which I think is very, very telling, you see, of course, the majority of people want the government funds to be used from Medicare to Social Security to roads. Even investing in AI actually takes priority over Bitcoin, building the Bitcoin strategic reserve. I think the couple of things are important in this data. First of all, there's a clear divide between Republicans and Democrats, perhaps not surprisingly. But I think this piece of data is very important because when the strategic Bitcoin reserve was announced, the guidance was given to Treasury and the Secretary of Commerce to come up with a strategy to acquire more Bitcoin, but on one condition, that it has to be budget neutral. And this is exactly why, because of this feedback from a lot of the electorate, people don't want government funds to be used to buy more Bitcoin. So let's see how it happens. It's very likely that source of Bitcoin will have from a lot of the seizures and fines that many of the crypto companies will pay. So here you go. People may want Bitcoin, but they don't want the government funds to be paid for it.
To Crypto Weekly, fun fact, today we're talking about the largest denomination banknote ever issued. And we're going to go right to Hungary, where they issued a 100 quintillion Pingo bill. I think, Henry, I've never even heard the word quintillion before.
It brings you back to your mathematics classes. But I mean, to give you an idea, yes. May, a quintillion has 18 zeros.
Wow.
So here we go. We had that in Hungary after the war. Interestingly, by the way, the other one often is referred to as the one that Zimbabwe had, where they had a currency of 100 trillion. Actually, a banknote that I have at home. I should have brought it today. But he goes, a very good example of the effects of hyperinflation on a country and a currency. Hungary is another good example. By the time this currency was worth only 20 cents in dollar terms.
Yeah, no purchasing power at all. That was because inflation and, prices were skyrocketing every 12 hours. We're talking about huge spikes in prices. That means that money had no value. With so much drama happening in financial markets and a lot of changes that are happening when it comes to trade war headlines, today we're going to talk about the role of Bitcoin in an investment portfolio, as well, of course, as any opportunities for more rally when it comes to the prices. Dr. Ryan Lemond, CEO, New Vision Wealth Management, is here with us. Dr. Ryan, thank you so much for joining us.
Thank you for having me.
Let me ask you a question that everybody is asking now, because there's a lot of drama happening in financial markets, and especially around U.S. assets. Everybody is asking about the role of Bitcoin as a diversifier in a portfolio, and how does it compare to the role of gold? What do you prefer as an asset class that reduces the volatility of the investment portfolio?
Thank you very much, May. Thank you for having me. I cannot compare them. I cannot put them in the same bucket. They are completely two different animals, in my opinion. So gold is the traditional precious metal asset that is used by central banks to back their currencies. Until we get to the point where central banks, they start using Bitcoin as a backup for their currency, we will still favor gold as a hedge, as a protection against inflation, as a protection against geopolitics. Bitcoin is still not there. Bitcoin has its part in a portfolio, but it's a completely different part than gold.
But as you're talking about central banks having it, we've had recently Mubadala, for example, here buying $400 million in Bitcoin, at least from an ETF perspective. And we had numerous other central banks exploring having Bitcoin as part of their reserves. What do you think is the catalyst for having central banks have more Bitcoin on their balance sheet, or actually start having Bitcoin as part of their reserve assets?
In my opinion, it's RWA, real world assets. The day Bitcoin starts having a utility, and other coins for that matter, whereby you can actually use it where it's tangible, where it can be used to purchase real world assets or back it up. Until then, I think we'll remain in the exploration phase. Also, you can see regulators are still exploring this. Just a few months ago, we had Mr. Gensler in the US, the chairman of the SEC, who literally destroyed the crypto markets in the US and virtual assets. So there's always political uncertainty that follows political drives that some countries have. So until that stabilizes, I don't think we're going to see it anytime soon.
So institutional investor appetite was a main factor and headline in 2024. To what extent do you expect more institutional inflows to crypto assets this year, and especially now that Trump is starting to change the landscape, at least the regulatory and the overall framework of crypto assets?
We're seeing it on both sides. So we're seeing institutions starting to accumulate virtual assets, and particularly Bitcoin, but we're seeing the other side as well. Just 4 or 5 days ago, I think, a very large whale placed a short position on Bitcoin of $322 million with a stop loss at $85,000 and then take profit at $65,000 and another one at $58,000. So when you start seeing both sides of the trades, this is when you start saying, this is an asset that is maturing. As long as you only see institutionals on one side and institutions not on the other side,
not a good
it's
sign.
not yet mature. And that's why we're seeing all of these big swings in Bitcoin. We need it to stabilize. The less volatility, the more adoption by institutionals.
Yeah, that was a hell of a short from that whale. I mean, how do you see the interaction that we're seeing between the price of Bitcoin and overall macro, M2? Like, what's your view on the overall outlook for Bitcoin, considering everything happening in the macro world?
So in the macro world, things are very tense, as you might have seen: tariffs, geopolitics, political uncertainty, etc. And here we see two generations. We see it from our own clients, actually, on the wealth management side. Traditional older ones, they move towards gold, less undervalued assets, Chinese stocks, Indian stocks, etc. But then on the younger side, no, we see them going towards Bitcoin, virtual assets. So we're seeing that transition happening from the older generation to the newer generation. So when you look at the newer generation, they don't want to worry about the hassle of storing gold in a storage box in Switzerland, etc. They just go on their app, click a few things, and they have their Bitcoin, which they see as a proxy to gold, if you will. So all of this uncertainty is pushing people towards these safer assets, if you will. Second, M2. M2 and Bitcoin prices have always been very much correlated, and at the moment we're seeing a spike in M2. So interest rates going down, so we're seeing money supply expanding a bit. So will Bitcoin prices follow, as we have seen over the past 10 years, I would say? That's the big question.
So a question about this particular idea. To what extent do you think that what we have seen during the past couple of sessions in the US market was a decline in NASDAQ, in tech sector, and that actually reflected on Bitcoin because there was some kind of correlation happening between the two? Do you expect this correlation to continue? Do you think that this is a factor that the investors should worry about?
Well, investors usually, when they have margin calls on their main assets, which is the NASDAQ in this case, what they do to cover their margins
they
is sell.
liquidate other
Exactly.
assets.
And we've seen this happen with gold and multiple others. This is what creates that correlation. But this correlation has a floor. So once the liquidation happens, you've covered your margins or you've closed your positions, then the correlation breaks down. So I do expect this correlation to break down sometime soon. If NASDAQ continues to drop, which we expect it to do, because we've seen the Treasury Secretary in the US, he said, a recession is coming. It is happening. So recession happening, that means overvalued stocks will continue dropping. So people will, instead of covering their margins, they'll close their positions. Once they close their positions, they don't need to sell Bitcoin anymore, right?
Yes.
Then they might invest more into Bitcoin. And this is, we might see Bitcoin go up again and the correlation becoming negative rather than positive.
And one last question, Ryan. Obviously, there's been a lot of talk about the change in the U.S. approach to Bitcoin and crypto more generally. To what extent do you think, with all the, I know you're quite negative on the U.S., but you think that the changes on the U.S. markets could, the change of the U.S. government approach to Bitcoin could maybe in a way save or give another boost to the industry in the U.S.?
100%, absolutely. So the winner out of all of this mess that is happening, in my opinion, are virtual assets, Bitcoin and other coins, especially the ones that are linked to real-world assets. So yes, absolutely. In all of this, yes, relatively negative on the U.S. for many, many reasons, but the positive out of it is the departure of Mr. Gensler, more crypto-friendly in the administration. And let's not forget, when you own the second largest Bitcoin reserve in the world because of seizures, you want this asset to flourish. You don't want it to go down. So yes, I do see a second life or third or fourth life, whatever you want to call it, and Bitcoin in the US, absolutely.
Thank you so much, Dr. Ryan, for joining us in Crypto Weekly. That was Dr. Ryan Lemon, CEO of New Vision Wealth Management.
Very interesting conversation, the eternal debate between Bitcoin and gold. And after the break, we're going to be joined by Mohammed Al-Masri from Hodler Investments to really talk about the life cycle of digital energy. Stay tuned after the break.
هذا البرنامج برعاية فينيكس جروب UAE.
We're now joined in the studio with Mohammed Al-Masri from Hodler Investments to talk about the digital energy value chain. Welcome, Mohammed.
Hello, Mohammed. Thank you so much for joining us. Hello, welcome to Crypto Weekly.
Great, welcome.
Please have a seat.
So, Mohammed, you talk a lot about the digital energy value chain. Can you explain to our audience what is that value chain and what are the big trends you're seeing in that regards?
Sure. The digital energy value chain consists of the emergence between the digital economy and the energy sector, and basically captures the entire value chain from the energy source to the power generation, which is mainly entering into a utilities-like sector, and then to downstream to the data centers. And those data centers could be either for blockchain computing or AI compute. So this entire value chain is what we refer to as a digital energy infrastructure.
And if we talk about blockchain technologies overall, and you look at different sectors that will benefit from these technologies of blockchain, which sectors and industries do you think or you believe that they will take the greatest benefit of these technologies?
We've seen benefit from across the entire sector or across the entire economies when it comes to modern technology like blockchain and AI, right? And the sectors that are accelerating adoption of these technologies are flourishing in terms of optimizations and efficiencies of their operations. And I've seen a lot, and our focus is mainly on the energy infrastructure side. And we've seen a lot of adoption in the energy sector from the oil and gas space, for example, from renewables that are adopting AI for operational efficiencies, that are adopting blockchain for streamlining certain data flows, or even there's been recently pilots on blockchain for oil and gas trading on blockchain, right, to streamline the efficiencies of the entire trading process. Even ports and logistics have been adopting it when interacting with trading conglomerates, right? So this is where I see a lot of the efficiencies coming from. But of course, every other sector, such as healthcare, public or private, can manage benefits from that, even education. Right.
So when it comes to this digital energy value chain you mentioned, we obviously see a lot of the Bitcoin miners, and many of them have pivoted or added AI, ALM activity in it as well. How do you see these companies evolve over the next couple of years, and what impact do you think this will have on their valuations?
Yeah, there's been a lot of shift between the energy transition, either energy companies adopting Bitcoin mining, or even Bitcoin mining turning into energy producers, right, on the power side. So it's been across both sectors where this transition or transformation is taking place. I think on the Bitcoin mining companies, there's around 24 or 25 publicly listed Bitcoin miners around the world, and approximately $25 billion market cap across these companies, with the top 10 maybe boasting 90% of this market cap. And we've seen incredible enterprise value increase on these companies as they transformed and transitioned their business models from purely Bitcoin mining to also starting to enter into verticals such as power generation and AI computing from HPC data centers or whatnot. But the main value is not so much with the technology that you enable, it's with the infrastructure that you own. That's why companies like Hut 8 went and acquired massive power generation plants, and they now announce themselves as a power generate or digital energy infrastructure company as well. So a lot of companies now are focused on acquiring infrastructure, and we've seen that the enterprise value when using a per megawatt term, right, you're looking at $4 million a megawatt on average across the top 10 companies when you try to take enterprise value per megawatt, and it costs them anywhere between $350,000 to $500,000 per megawatt to build it. So you have more than a 10x increase in valuation when you compare this to publicly listed companies, not so much on a private transaction, right? So if you were to build this infrastructure and then list your company onto the market, these are the valuations you could expect to see, which is around $4 million a megawatt, and it costs you 10 times less to build it.
So, Mohammed, to what extent do you think that this trend is evolving here in the GCC especially? I mean, I'm using blockchain to build sustainability and to actually rely more on renewable energy.
Yes. You're using blockchain, physical blockchain infrastructure to monetize energy resources that are not being monetized. For example, the region is known for its oil-rich economies, right? And they're always in the production and exploration and production of oil and gas, there is wasted energy resource. This wasted energy resource can be used and monetized through power generation to power blockchain data centers or even AI compute workloads. And this in the region has been a topic of discussion across the entire region. However, we have not seen an accelerated move towards capturing the entire digital energy value chain. But we believe that Abu Dhabi has been a pioneer in doing this in the region with the Bitcoin mining operations that are actually present today in Abu Dhabi, because they consume energy that is basically adding efficiency to the current power plants that are over there to maintain baseload requirements, right? So there's a lot of this happening, but not so much in an accelerated fashion.
And what is the biggest risk you see in the sector? Like when it comes to digital energy value chain, what is the biggest risk you think as a sector that could impact the profitability of these firms?
From a financial risk, you mean? I mean, the biggest financial risk we see is that energy prices fluctuate. So if you were as an investor on the downstream side from the data center business model, and your main OPEX or your main operational expense is really the energy source. So you need to get access to cheap, reliable, responsibly produced, clean energy resources.
Thank you so much, Mohammed, for joining us for this interview. That was Mohammed Al Masri, Holder Investments. Thank you so much.
Thank you.
We asked our audience if they think other countries will also follow the US and create a Bitcoin strategic reserve. And the data is really interesting because 60% of our audience think that it's too risky and other countries and governments will not follow suit. Now, this is really interesting, Henry, because the narrative by analysts, by institutional investors, by international banks is the fact that what's happening in the US is going to actually spill over to other countries.
Yeah, absolutely. I'm actually quite surprised to see this data. I mean, my personal view is that many other central banks will follow what the U.S. has done, maybe not as a Bitcoin strategic reserve, but I think holding Bitcoin as part of actually the reserves they hold in the same way that they have some gold and they have different currencies and they'll have some Bitcoin as well. But this shows you again how controversial this topic is. Our show may be called Crypto Weekly, but I think there's a lot of road to go again and a lot of debates we'll have on this topic. So it'll be interesting to do the same poll in a couple of months, actually.
And now we're moving on to the educational segment, and we're going to talk about blockchain bridges. What do they do, and why are they important? Henry is going to walk us through these data.
Do you know what we mean by blockchain bridges? Well, today in the Education Minute, we'll find out. The blockchain bridges are very straightforward. Let's say you have an asset like Bitcoin, and you want to use it on the Ethereum network. Well, you cannot really do that easily. It's a bit if you have a bicycle that you try to drive on a highway made for cars. This is why the crypto ecosystem came out with the concept of cross-chain bridges via wrap tokens. How does it work? Let's say if you have an asset like Bitcoin, you take the Bitcoin that you have and you send it to a custodian or to a smart contract, and that will mint a new asset on the other blockchain where you want to operate, say on the Ethereum blockchain. Then you can use that Bitcoin on the Ethereum blockchain, and when you're done, you can come and redeem it and go back to your original Bitcoin. It's a bit as if you have a bicycle and you want to go on the highway, you put it on top of a car, drive on the highway, then when you're done, get out, take the bicycle, and go ride your bicycle. Here we go, an easy explanation of what are blockchain bridges.
So, in a sense, they allow you to actually move between different blockchain technologies, which is really important because, you know, now we're going to start to see more evolvement when it comes to blockchain, so we need those bridges.
Absolutely. It needs to be interoperable between different layer ones, and bridges allow you to do that. Are they perfect? No, but they really serve a purpose.
We're getting there. With this, we come to the end of this episode of Crypto Weekly. Thank you so much for watching.
Thank you, guys, and see you all next week.
See you.